this afternoon. Um, Pardon me, I am a little under the weather this evening. My name is Rachel, this afternoon. My name is Rachel Gutierrez. I am a community outreach coordinator for the City of Houston Department of Neighborhoods. And we welcome you again to the Month of Service workshop. We want to start by saying that the Month of Workshop is a partnership between several different entities that came together with this idea of wanting to, instead of individually having meetings throughout the city, we thought we would collectively get together and provide the information in one location, which is virtually, especially after COVID. So we thought, why not do this? And fortunately, we have had many of success to be able to provide the information that we share on a monthly basis, because there are plenty of residents out there that either can take advantage, be educated, use the resources, whether it's for their own personal use or for somebody that they know in their home, in their life. So we definitely appreciate the engagement that we've received over the years, and we hope to continue to receive engagement from you all and for you showing support to us as well. Today we have a great topic, because obviously we know for those that are homeowners that property taxes is the number one concern when it comes to home ownership. So this workshop we do provide on a monthly basis, and so we didn't want to go for the month of June without giving you this information. So we have two entities today, the tax appraiser, excuse me, the tax appraisers, and then also, the property taxes. Oh gosh, I'm so sick. I'm sorry. So we have the Harris County Appraisal District and the Tax Assessor Collector's Office to do a joint presentation for you today. And then also just want to let you guys know that today what you are receiving is for educational purposes. It's not legal advice. So anything that you receive today, just keep that in mind. Also, there will be an opportunity for you to ask questions. We ask that whenever you do ask questions, try to be as general as possible. We don't want you to put any personal information that perhaps somebody could unfortunately use it to their advantage. So please do as general as possible. If you do need follow-up assistance, you are more than happy to we are more than happy to provide you with the information that you need to follow up with either of these entities so that you can get your question addressed. So I will go ahead and give the floor to our presenters. Thank you again for tuning in, and hope to see you in the next presentation.
All right. I guess Shay will want to go next.
All right. Hi, hope everyone can hear me okay. My name is Shay Pinkowski. I am here with the Office of Ann Harris Bennett, the Harris County Tax Assessor Collector. And on behalf of Ms. Ann Harris Bennett, we are so excited to welcome you, be able to answer some questions, and hopefully assist you in any queries that you might have. The goal is to be able to inform as many people as possible. So we're really excited to be able to speak to people today. So if you have any questions, please feel free to let us know. Try and keep it general. And if you have any specific questions, then we can give our contact information at the end. And if you'd like to reach out to us individually, we would highly recommend that you do so. But again, my name is Shay Pinkowski, and we are so excited to be able to speak with y'all today. Thank you.
All right. All right, so good afternoon, everyone. I think you can see me. My name is Mabel Menifee, and I'm with the Harris Central Appraisal District. And just double checking, is everyone, can everyone see me on the screen?
Yes.
Okay,
Yes,
perfect.
ma'am.
So again, my name is Mabel Menifee, and I'm joined today by two of my colleagues here at HCAD, Linda Lightco, who is a senior exemption specialist, as well as Raven Portis, who is part of our residential property division appraisal staff. They're going to be in the chat and be able to answer your questions. Even if not, we certainly promise to get back with you and find an answer if at all, if we possibly can. Again, just as Shay and Rachel mentioned, please be sure to not give too much away of your personal information because we are operating on a within a public forum here. So if you need to provide that information, some additional information, you can always email it directly to one of us through the chat feature. As Rachel mentioned that property taxes is often the #1 concern of many homeowners, and we don't necessarily like to hear that, but certainly because of rising property values in Harris County, the popularity for some reason of investors and folks moving into the area uh, has created have caused values to increase, which causes increased costs in other areas such as insurance and other things. So one of the things we try to do here on these AMOS workshops is to help as many people as possible reduce their property tax burden if at all possible. And one of the primary ways of doing that is to make sure that you have all of the exemptions that you're entitled to. So that's one of the things we're going to talk about today, as well as kind of briefly, we've passed the protest deadline and we've ended our series of protest workshops that we provided for homeowners who were interested in appealing their values, which HCAD sent out, which the district sent out in April. However, there may be a few lingering questions that some of you have, so I'm very pleased that we have an appraiser on the call with us today as well. So without further ado, we'll just go ahead and get started with the presentation that I have concerning property taxes and as well as appraisals and a little bit about protesting and exemptions. And then that's going to be followed up as soon as I finish my presentation. It'll be followed up by the Tax Assessor Collector's Office and Shay Pentowski, which we like so that because property taxes is often and the collection and assessment part of it, we're both part of the same coin, just different sides of the property tax process. So it's always very helpful to hear what both of us do and the distinctions, which kind of helps you as a property owner better navigate the system. So without further ado, I'll go ahead and get started with my presentation on talked about property taxes which support I'm trying to get that. Here we go. The property tax system in Harris County. We talked about property taxes being supporting, we have property taxes which play an outsized role pretty much in the state of Texas because there is no state income tax here. So property taxes are pay for the majority of local services like the school system, police protection, fire, hospitals, road maintenance, and etc. So we're going to talk a little bit today about the role of appraisal districts and valuation notices, a little bit about protesting your value, and about exemptions. The role of appraisal districts primarily is to value all property in a particular county, whether it's residential, commercial, agricultural, business, or industrial or business personal property. There is an appraisal district in each county in Texas, which does this for that particular county. And we are required to do so at 100% of market value as of January the 1st of each year. We also administer the exemptions and for homeowners within that county, and exemptions homeowners as well as other property owners within that county. And exemptions are ways where I guess the best way to describe it is probably like provide a discount to some of the property taxes that individual property owners pay. We also, all of that centers around the goal of certifying the appraisal rolls each year for all of the taxing jurisdictions in the county. And that allows us, once we certify those values, those taxing jurisdictions then can have a better understanding of how much revenue will be coming in from taxes so that they can set their tax rates, they can set their budgets and their tax rates accordingly. Couple of important dates to always remember. January the 1st is always going to be the date of appraisal on all property. What that basically means is that the condition of the property on January the 1st of that year is what the value for that year will be based on. Why is that important? It's important because you need to remember that should something happen to the property on January the 5th or 6th, the property is going to be valued on not what happened on that date, but the way it was on January the 1st. You could have a room, have a fire, perhaps a room is destroyed, property is destroyed, value is decreased. However, it will still be the same for that year. Now, if the following January the 1st rolls around and that has not been repaired or fixed, then the new value is going to reflect that lower value. May 15th is usually the protest deadline. It's the statutory protest deadline by law, unless it falls on a weekend, in which case it's a following business day, or in some cases, if you don't, if you receive your value notice from HCAT after, say, April the 15th, then you will always have 30 days from the date of the notice, that value notice, to file your protest. So it's going to be 30 days from the date of the notice or May 15th, whichever comes later. Then, of course, in October and November, that's when assessor collectors like Shay's office mail out the tax bills once they've done all the calculations and the policies and procedures that are dictated for that. And then, of course, if the bills have not been paid, if the tax bill has not been paid by before February the 1st, then it is delinquent. So as I mentioned before, HCAD does the appraisals and we're required to be at 100% of market value by the property tax code, which we're governed by here in the state of Texas. And values are usually for homeowners, and I'm assuming that's most of us listening today. Values are going to be mostly derived based on sales within the area. Also, just kind of a HCAD being the largest appraisal district in Texas, Harris County, we have approximately 1.9 million parcels that have to be appraised annually for approximately 500 taxing jurisdictions. This is what the annual appraisal value notice looks like. As you can see, those of you who have gotten yours in the mail in May, it's been redesigned a little bit this year. So what you're going to see when you open it, several important things will be that unique iFile number that you see up in the top right-hand corner that's highlighted. That's your own personal iFile number. So whenever you're conducting business with HCAD online, that iFile number
Excuse
is,
me, Miss Mabel. We
yes,
don't see the presentation. Did you share it?
I thought I had. Yes, okay. Hold on. Hold on. That's what I thought you guys were seeing. I'm seeing it just fine. Sorry, folks. What about now? And hold on one second. Okay. Apologies. What about now?
No, I don't see it.
Now?
Mm-mm. Nope.
Hold on just 1 second. So I'm gonna keep. Okay. I have no idea why you can't see it. Now, let me. Not even now.
No. Did you click share screen?
Yeah, I thought so. Let's see.
Like on the bottom, it's like a green button that says share screen.
Yeah, I hit that already. Hold on.
And after it's gonna pop up another window and you can choose the PowerPoint if it's open, because I think you need to open the PowerPoint first.
Okay.
Yes, now we can see the Outlook. So maybe, yeah, you can go down there where you saw, you have the icon. Perfect. Yes, and now maybe you want to put the presentation slide.
Okay, I guess, all right.
It's up to you.
Now,
Yeah, perfect.
apologies, apologies, everyone. This was all set up and working, and you do one thing out of sequence, and apparently, so here we are. Anyway, so we were talking about the Central Appraisal District's role. Thank you very much for your patience just now. The important dates, as we talked about, January the 1st, being the date of appraisal. We work with over 500 taxing jurisdictions, and our annual appraisal value notice that you all get each year. Just kind of some important things. One thing I want to mention about this is that for a lot of people that may be listening, and they may think kind of, oh, well, I don't really have to worry about this because my mortgage company escrows. Please take a look at this when it does come in the mail, because if there is anything on there that you would like to dispute, it is up to you to do so. Your mortgage company is simply going to pay whatever bill arrives in November or December when the bills come from the tax assessor collectors. If there is an issue with the appraised value, you disagree with it, or whatever, it's your responsibility uh, to to correct that, and you can do so once you receive this uh, by by sending in a protest notice to make sure you have the opportunity to change it. If you miss the deadline for protesting, then in most cases, that's going to be the value that's assigned to your for your tax bill that year, and that's what's going to go to your mortgage company. They're simply going to pay it, and then you may in fact receive your escrow statement saying that your mortgage note is going up or whatever because of that because of the tax bill that you did not take the opportunity to look at or try to correct or lower to what you consider a more current value. So just wanted, that's something we, that I always want to tell new homeowners, especially. The annual value notice, a couple of things that we talked about on there. There's the appraised value, and then there's the market value. The market value is what HCAD establishes each year on your property, and it's the value at which the property is going to sell on the open market to a willing buyer at an arm's length open market during an arm's length open market transaction. That's our primary role, to establish that market value. Also, please remember that protests are going to be based on that market value. So you want to try to get your, if you are protesting, you may want to, your goal may be to get that market value reduced to the appraised or below the appraised value in order to see any, in order to lower your property taxes. In some cases, you may get that market value lowered, but it may not be below the appraised value. And we'll talk a little bit more about how that appraised value is established in a moment. But again, just simply, quite simply, what HCAD's role is, again, the home values are reviewed annually by the district, and its sales prices typically go up or down, just basically depending on the market forces. And as we've seen in recent years, they've been going up. This year, they kind of stabilized. A lot of that probably had to do with higher interest rates and some other things that were put into place in the market too. But sales prices have, in most instances across the county, stabilized. In a few instances, they have gone down this year. It's important also to remember that when people say HCAD raised my taxes, HCAD does not set tax rates. The tax rates are set by the taxing jurisdictions, such as your HISDs or your other school districts, your city, county, county commissioners court, city council. These are the entities that vote on the tax rates each year. The tax rates are basically calculated on your appraised value. And that's important to remember too when you open that letter and you see market value versus appraised value. The appraised value is what your tax rate is going to be calculated on. There are different types of ways if you disagree with that market value that HCAD has established, that you can file what we call a protest or an appeal. With HCAD, you can do it on a paper form. You get that form in the mail with your value notice, or you can go out online and do it at our website. You have several options and ways of protesting. One is called the iFile, which you can do everything online electronically. You also have the option of filing something called an iSettle, where you would include it with the iFile. You would sign up for that, and that's an option where you would simply upload your information. HCAD's going to take a look at it and decide if they can make you an offer in terms of lowering that value based on the additional information you provided. They're going to send you an offer electronically. Then you have the opportunity to accept that or not. If you don't accept it, and you don't have to, you will then be scheduled for what we call a formal hearing with the Appraisal Review Board. That is if you applied for the iSettle option. You also have the opportunity to just meet one-on-one with an HCAD appraiser to talk about your value. That's called an informal hearing. And then, of course, the formal hearing. What's important to remember here is that if you opt for the iSettle, then that sort of is in lieu of the informal hearing. So keep that in mind, whether you want to do the iFile to see and add the iSettle, or if you would rather just do the informal hearing. And then, of course, some folks would just rather go straight to the Appraisal Review Board, but that can be a second or third option. The Appraisal Review Board is a group of citizens that are interviewed and hired that are basically hear your appeals. They're kind of like a jury of your peers, if you will, where they listen to the appraisal district's case in terms of how it's been valued, and they also listen to yours and consider the evidence that you brought in. These can be done virtually or in person. And with the appraisal review board, you can also opt to have a one-person panel to hear your case, or you can have three people. The traditional has been 3 people, a 3-person panel, but in recent years, the legislature has also opted to include 1-person panels as well. And then, of course, if you get to the formal hearing and you're still not satisfied with the results, you have the opportunity to file for arbitration or other types of litigation if you're still not satisfied. So after you file that protest very quickly, and some of you may be waiting on that additional information as we speak, you're going to get a notice of when your hearing date has been scheduled. And you also are going to be able to then see the information that HCAD has used to set your market value. Now, one thing that's important to remember here is that you, because of state confidentiality laws when it comes to sales, and we do use a lot of sales information in that valuation process, because of the confidentiality laws, we cannot share that information by law. We cannot share that information with you unless you file a protest. And that triggers the legal mechanism for us to be able to release that information to you. So you could just be curious about why HCAD value your property the way it did. You can still file a protest and provide that information, and you're not obligated to continue with the protest. It simply allows us to provide that information to you. So some of that information that's going to be in there includes some of the sales in your immediate neighborhoods, as well as some of the surrounding neighborhoods with similar properties. We also provide you with maps that kind of help show you where that takes place, and then other additional points that the district has used. So let's talk a little bit about, so that kind of gives you an overview of what the administration, what HCAD's valuation and protest process is like. Let's talk about exemptions now, because this is the one easiest way for individuals to make sure that they are not paying more than they should on their property taxes. So, talk a little bit about what they are, how do you get them, and how they're used in calculating your bills. So exemptions exclude part of your property from taxation by reducing the appraised value, which, remember, is the value that your taxes are based on, are calculated upon. It reduces the appraised value before the tax rates are applied. And there are some very common ones. If you, in fact, live in a home, own and occupy a home as your primary residence, then you should have the appropriate exemptions, and the first being the general resident homestead exemption, which is the most common. There are other exemptions that you can also apply for, or you may be eligible for. The over 65, there's an over 55 surviving spouse. There are disability exemptions. There's certain types of exemptions for individuals who served in the armed forces that are now disabled, that were disabled as a result of their service. And then there's some other service-related exemptions that are available as well. General resident homestead exemption is very simple to obtain. If you own and occupy the home as your primary residence, we require that you fill out the application, which is available on our website, and that you require certain document, and we do require certain documentation. Obviously, proof of ownership would be the primary one. We also ask that you send in with that application, you provide with that application a copy of your driver's license. And the address on the driver's license should match that of the home on which you're applying for the exemption. Now, one of the important things that having this general resident homestead exemption does is that it protects you from steep increases, year-over-year increases in your property values. And for a lot of folks, most of us will recall seeing that, particularly between 2021 and 2023. A lot of communities, a lot of neighborhoods that were very popular as people were moving, folks moving in, folks bidding on houses because they wanted to own a home in a particular neighborhood. We may have seen their property values increase as much as 25, 30, 35, 40% even in 1 year. So by having that general rate, which is great if it's an investment property, if it's not, and you're trying to make sure you're covering your mortgage note as well as your insurance and other expenses of owning a home, not so great. So what the general resident homestead exemption does is it provides that a 10% annual appraisal increase cap. In other words, if the property is rapidly rising in value, your value, your appraisal cap will protect you from that rapidly rising increase by capping any increase at 10% in a given year. So if you have a $200,000 home or $300,000 home, and say it can never go up more than an additional 30,000 in 1 year. You also get a $100,000 school tax exemption by state law. Those of you may recall this time last year, it was a $40,000 school tax exemption. You went to the polls in November and you voted on something called Senate Bill SB 12, Senate Bill 12, which raised the school tax exemption from 40,000 to 100,000. And this means that for your school taxes, you do not pay taxes on the first $100,000 of value on that home. There may be other exemptions offered by various jurisdictions, and this is where it comes down to depending on where you live in the county. What school district, maybe you have MUD districts. If you live in the city of Houston, you have some additional exemptions that may be offered. And in other places, if you're someone searching, if you're not a homeowner yet, or you're searching for a new place to move, you can always find out what those tax rates are, depending on where you live, by going out to the HCAD website and going under jurisdictions, and you can see what the tax rates are for the previous year. They may not have been set yet for this year, like they have not for 2024, but you can see what they were last year and give you a good idea. It'll kind of may help you determine if that's an area of town you want to live in, because they offer better tax breaks than others. The over 65 and disability exemption. There's something pretty good about turning 65 in terms of being a homeowner, and that is you get the over 65 exemption. The over 65 exemption and the disability exemption, 100% disability exemption, those two are pretty much the same, offer basically the same benefits. You can only have, however, one or the other. The over 65, you qualify for both of those the entire year that you turn 65. So if your birthday is December 29th of 2024 and you're turning 65, you'll get those exemptions for the entire year. You just simply need to apply. The disability exemption is you become eligible for that the entire year that you become eligible to receive the disabilities. And these are usually determined by Social Security's Federal Old Age Survivors and Disability Act, or in some cases, someone may not be receiving Social Security, so they would simply need to fill out a physician statement, one that we have on our website. It has to be filled out by the physician and submitted to HCAD. Some of the benefits for this over 65 exemption include you get a school tax. They call it a school tax ceiling or freeze or limitation. Basically, it just means that your property taxes, your school property taxes, not all of them, but your school property taxes are frozen at whatever you were paying for it that year that you turned 65. You may not, you will not see them go above that amount unless you do want, you add some value to the property, as in terms of you add some square footage. So you add another room, you add a swimming pool or tennis court. That of course increases the value. So you'll still have a freeze available for your benefit, but the value of the property is going to be recalculated a little bit before you reach another freeze. Obviously, it's going to go up a little bit because you've increased the value. The ceiling can go down if the value of the property falls as well. So this is available to everyone who also qualifies or may already have the general resident homestead exemption. So it's kind of an add-on to that. It's important to remember that the general resident homestead exemption is available for everyone. The over 65 is available for those who have the general resident homestead or qualify for it, but are over 65, and it adds those additional benefits to what you would have received under the general residence exemption. So the other things that you might get that you get for as part of the over 65 exemption include being eligible for something called a tax deferral and to pay taxes in installments without penalties. Shay from the tax office is going to talk a little bit more about that in a moment. There are other individual exemptions. Again, I mentioned it kind of depends on where you live. Other jurisdictions may also offer specific additional benefits for the over 65, depending on where you live, such as the city of Houston or a particular school district. The over 55 surviving spouse just simply means that if the couple, one of the couple, the individual who received the over 65 exemption because they had the spouse had turned 65 before the other spouse, if that spouse passes away, as long as the surviving spouse is over 55 years of age, they will be able to continue that exemption without any change whatsoever or any recalculation. The school tax ceiling continues, and should you move, you can transfer it to your new dwelling. Again, you're also eligible for the tax deferrals and installment plans. Quickly, I want to go over something called the heirship exemption, which is really a part of that general resident homestead application. For anyone filling that out, the heirship exemption piece is kind of explained in section 3 of the homestead application, and it basically triggers after you answer a couple of questions in section 3 that is this is the property for which the application submitted an heir property, or do any other heirs occupy the property? You answer yes to one or two to both of those questions. Then there's a little bit of an additional process that is triggered by this, but it is designed to make sure that that individual living in the property, even though they may not be 100% owners, this is for heirship property, because obviously in a lot of cases it may be left to siblings, and say there's just one sibling living in the home, the other 3 may be off somewhere and have their own homestead exemptions living in their own homes, or there may be one still living in the home. But as long as this process is completed, it does allow an individual to receive 100% of that exemption, as opposed to they may not have been eligible for only their percentage of ownership. So if there were 4 heirs, then that heir living in the property may have only been able to get 20% of the homestead exemption. In this case, with the heirship plan heirship exemption processed, they will be able to get 100%. And It in no way affects the ownership rights to the property of any of the other heirs. We do need some additional information, as you can see here, that might be required in order to get that heirship exemption, such as an affidavit establishing your ownership interest in the property, of course, the death certificate of the previous owner. We want to see a copy of the most recent utility bill and any court records that you can provide. I would say if you find yourself in this situation and you're still wondering what else can I do, feel free to contact our exemptions department here at HCAD, and you will find a specialist. They'll be more than happy to walk you through it. The immediate homestead exemption, something fairly new, got started in 2022. And what that provides is individuals previously, remember I talked about January the 1st being the date of appraisal. Previously, you were not eligible for receiving the exemption until January the 1st had passed, with you being in the property. However, the immediate home, so that first year where you just moved in for a partial year, you used to not be eligible to receive it for that year. Now, because of the immediate resident homestead exemption, you may be able to qualify for receiving a prorated exemption upon occupying the home. So if you move in on May 1st, you into a new home on May 1st, you might actually qualify for receiving that exemption based on its value from May to December. That is, of course, unless the previous owner had exemptions on the home. In that case, you're going to benefit anyway from the previous owner's homestead exemptions. If the previous owner did not have those exemptions or the home was never occupied, that's kind of what this immediate homestead exemption targets. It provides that prorated exemption for that year for those folks. The second full year that you have it is when that cap eligibility year that gives you that no increases over 10%. That's the year that it is established going forward. So remember, for the immediate resident homestead exemption, for those who are looking at moving into a new home, you won't receive it if the home was previously owned and receiving exemptions, because but again, you're going to benefit from those exemptions anyway. The previous owners, they're going to remain in place for that tax year. So how do you apply for your exemptions? You simply, you can apply for them through online. We have paper forms that you can apply for, you can send in. We have a mobile app for most of them that you can also use, or you can go online and download the application, most of which is fillable, and submit it that way. Simply upload that copy of your driver's license that you're going to need. And please, if you are planning on applying for your exemptions and say there are two owners, 50% because you're a married couple, please be sure to send in a copy of the driver's license for both of you. Otherwise, and this happens so often, it's going to get delayed because we don't have the all of the information. It's going to take, we're going to send you a letter saying we need a copy of the other owner's driver's license. And then it kind of puts you in the back of the line again. So try to send everything in correctly at the same time. Again, that's making sure you can provide proof of ownership. Usually that's going to be in the form of the deed being in your name, as well as a copy of both owners' driver's licenses. And once you apply and we start processing, you're going to be notified within at least 90 days, and it could be sooner. We also, if you have any additional questions, we have a how-to video that's attached to that general resident homestead exemption form that you can actually follow as you fill out the form online. Remember, I told you it's fillable, so you can do both things. And I also want to talk a little bit about something as a result of last month's storms. We're rolling back out the temporary disaster exemption, which was approved by the legislature in, I want to say 2021 or 20, anyway, it's fairly new, but we have used it several times because of the wild and crazy weather we've been having in Texas. But most recently, the storms that have been that we have been subject to in April and May are have resulted in serious damage to many homes. And I do apologize. I did change this date, but apparently I didn't save it. So I'm looking at the qualifications for the disaster exemption are that it has to meet at least 15% of your value. In other words, that's the damage threshold. The application can be found on our website under forms. And keep in mind, this has to be physical damage to the property. And it says here that the deadline to apply is May 28th. That's for the previous one. My apologies. I meant to add the deadline for applying to this one. For this one is September the 12th. So what happens is once this disaster exemption kicks into place, once the governor declares an area a disaster, and then you have a certain number of days, I believe it's 105 days, somewhere in there, after from that date of a disaster declaration to file for the temporary disaster exemption, which gives you some relief from your property taxes for that year because of all of the damage that was done. Again, it has to be at least 15% of the 15% is the damage threshold. And that's to the dwelling itself. Quickly, one other thing I just want to add to this before I turn it over to the tax office is that the other thing, besides the annual value notice that you get from HCAD each year, is you're going to get something usually around December, early January. It's going to be a little white card that comes in the mail. That's your annual confirmation card about your exemptions. If nothing has changed, then you get it, throw it in the drawer. However, if there has been a change in ownership, this is kind of a reminder to say, please let us know, because these are the exemptions that we currently have on the property. If you're not eligible for those, you need to let HCAD know, so that we won't find out 2 or 3 years down the road that the original owner of the property has passed away and that there are relatives living in it who may not be eligible for the exemptions that the previous property owner was receiving because they were over 65 or because they actually owned the property. So if nothing has changed, but when you get this in the mail, take a look at it and make sure you contact HCAD if there's anything that's incorrect. This is what our website looks like, HCAD, at www.hcad.org. And as I mentioned to you before, you can see under the blue tab, where you can go in and fill out forms. We have information about if you want to do a property search on your address or neighbors or just anywhere in Harris County, you can do that on here as well. We've got also helpful information videos that talk about different subjects or different things that HCAD does as it relates to exemptions and appraisals and valuations. A lot of useful information out here on our website, as well as some latest updates. And you can also contact us. We are located on the Northwest Freeway at the Hollister-Tidwell exit. Our website, as I mentioned before, is hcad.org. You can also contact us online here at hcad.org/contact us form. There's also currently a help at HCAD, which is kind of going away, and you'll be using this online form, but it's still out there now where you can email us at help@hcad.org. And that is all I have to information I have to provide for you today. Thank you so much for listening. And as I said, we will be around following Shay's presentation for any questions that you might have. Thank you so much.
Awesome. Thank you so much, Mabel. I appreciate that. Let me go ahead and share my screen and make sure that everything's working on my end, just because I have technical difficulties pretty regularly. So there we go. Can everyone see what I'm seeing?
Yep.
Perfect. Alrighty, so thank you all for joining us today. I am with the Harris County Tax Assessor Collector's Office with Ann Harris Bennett. And as I said before, thank you for joining us today. I'll try to make things as clear as I can, but as we said before, if you have any questions, please feel free to just send me a message in the chat. I'll reply to you after, or we'll answer questions at the end as well. So here at the tax office, we are the office that is in charge of collecting and sending out your bills for your property taxes every year. That information that's provided to us by the appraisal district gets sent over to us. We collect approximately 1.7 million tax accounts because Harris County is so large, and we collect more than $8 billion in property taxes each year. We do collect for multiple jurisdictions. So we would collect for your Harris County, your Houston ISD, City of Houston, Harris County Flood Control, along with quite a few schools, emergency services districts, but it does depend on your location and which jurisdictions are applicable to your property. Just a quick visual representation of how we would calculate your tax bill. We do receive the taxable value from the Harris Central Appraisal District every year. Now, that taxable value is determined based off of the information that Mabel was able to provide to you earlier during her presentation. That taxable value is multiplied by your tax rate, which is a rate that is determined by your taxing jurisdictions every year. And that is in order to supply them with enough funds for their maintenance and operations, as well as any debts that are accrued from that jurisdiction. And a lot of times it is something that they, will, if any large changes happen, they do have those meetings that you would have to go to in order to provide your voice and assist in determining what those values are. But those values are determined, and that is what we use to collect, or that is what we use to calculate what your tax bill is. Each jurisdiction works on its own, so what you get collected for on one jurisdiction will not be the same as what you would get collected on for another. And that is all the way around, regardless of whether we are the office collecting your taxes or whether it gets collected independently. Let's see here. We did have some recent changes in order to reduce property taxes. The Harris County taxes were increased for the over 65 and disabled exemptions from $250,000 to $275,000. So that's an increase in your exemptions for the offices that are collected in Harris County. So Harris County, that ISD, along with the flood district, as I mentioned earlier. Your City of Houston bill has increased your exemption as well for that over 65 and disabled exemption, and it is now $260,000 as opposed to the $160,000 that it was the year before. Your school and general homestead exemption has increased from that $25,000 to the $100,000 every year, along with your homestead exemption being eligible for proration, as Ms. Mabel mentioned earlier today, as opposed to having to wait for the first full year in which you lived in that property. It is applicable to you from the day that you moved in and applied for it. So once that is applied for, it gets applied based off of that date as opposed to the first full year, which is really convenient for a lot of folks. Let's see here. We did receive some information in reference to the property tax bills for school taxes. The general homestead exemption for schools has been increased from $40,000 to $100,000, which is really good for a lot of homeowners. It did increase your exemption, meaning that you would pay a lesser bill. We did also pass a bill whenever we went to go vote that the limit of property appraisal for non-residential properties has increased. And there is a limit now for that under $5 million properties. There is something that is in place now called a compression. A compression basically was a reconstruction of how the school's finance system was collected for in reference to local school revenues. So that also wound up decreasing the amount paid for a lot of school property taxes for those over 65 taxpayers and their homesteads. Let's see. Another quick visual representation of your tax bill here, and this is normally what you would see around fall of the tax year that this is in reference to. So this upcoming 2024 taxes you'll be receiving in the mail starting around October and on through December and forward, depending on when your tax bill was certified. This bottom portion we have zoomed in on just so that you have an idea of what it is that you're sending to us in the mail when you are submitting your payments. So if you are one of those taxpayers that prefers to send their payments in the mail, this little portion at the bottom that is perforated is the part of the bill that you would send in with your check. And it includes your owner information. So you're going to want to make sure that that ownership information does match the information as is applicable to that property, along with your account number, the payment amount that is going to be paid on, and the make check payable to section there in the center is going to be where you would submit that payment to. And then, of course, there's messages that are applied to the taxpayer. And on our end, this is going to be mostly if you are over 65 years of age, and giving you those options for your payments. So that's just a quick little visual so that you have an idea of what you're going to be looking for whenever you receive your tax bills this fall. We have on here the homestead exemption visual representation because we do like our visuals, just to be able to see what the differences are when experiencing a homestead exemption versus a homestead and over 65 or disabled exemption, because that difference is quite stark. Without any homestead exemption here showing on a property worth $275,000, you would expect a tax bill, depending on your location, of about $7,153. With a homestead exemption, that does get reduced by about $1,830. So you do see a bit of a reduction there, and every little bit helps. And with over 65 and disabled property owners, for their homestead property, you can see significantly larger changes for your value. So it does get reduced a more significant amount. As we see here, it's about $4,826 as opposed to the $1,830 that would have been reduced by just the homestead. So you end up seeing a bill more along the lines of $2,327. So you can see the difference does get exponentially larger depending on your exemptions, and that is why we are always recommending to everyone who is over 65 or is going to be turning 65 to be mindful to apply for that over 65 exemption or that disabled exemption, because it really does make a difference. Tax limitations. Ms. Babel touched on this earlier today in reference to the tax ceilings or tax freezes, as people will call them. This is in reference to your school taxes. So your ISD tax that gets collected on every year. When you turn over 65, you have applied for that over 65 exemption, that tax freeze, that tax ceiling gets applied based off of the year in which you turn 65 and have applied for it. And from that point forward, that is the limitation. It's set at that amount and it will not go any higher than that amount for your school taxes. Always very adamant that everyone who can apply for this does so. If you know anyone who turns 65 soon or is going to turn 65 soon or already is, because there are those who they turn 65 and they just aren't aware of it, or they let it go and they don't stay on top of it. So we do recommend that if you are over 65, that you go ahead and get that applied for, because it really does make a difference for you, not just this year, but in future references as well. And again, this does apply to homesteads of disabled or 65 and older taxpayers. So always keep that in mind. Another of the very important and very crucial steps or benefits of turning over 65 is going to be something called a tax deferral. The tax deferral is something that you can apply for through the Harris Central Appraisal District. That application assists you in having this applied to your account. And when this gets applied, it is a postponement of your taxes. And essentially what this means is your tax bill is still going to be due. And for a lot of over 65 homeowners, it's still going to be that reduced amount. So it's still going to be that reduced with the 65 and over exemption. And while you are still owing these taxes, it does so at a significantly reduced penalty and interest rate. So instead of paying our usual penalty and interest rates, it is only going to be a 5% interest per year. So when you split 5% between 12 months, it's going to end up being around 1.6% per month. And whenever folks will ask me as to the tax deferral, should I get it? Should I not? I always recommend that you apply for it, because even if you do not need it, even if it's not something that you're, desperately needing, that you don't have to, that you have the money to pay for your property taxes, that is excellent, well and good. But should an occasion or some horrible twist of fate occur in which you are unable to do so, whether it's unforeseen bills or, emergency situations, anything could happen. And all that this does is provide a form of insurance for yourself that should anything happen, you will not be faced with any form of attorneys or legal actions if you have the deferral active on your account. And it does, as I mentioned before, reduce the property taxes collected for penalty and interest. So it delays your taxes. It does not remove them completely. You are still able to pay your taxes, then by all means do so. But if you can apply for it and have it on your account just in case, that is what normally we would recommend in order to ensure that should the unthinkable happen, you're covered for it. Again, this does delay it. It does not cancel your property taxes. So if you decide later on to move and relocate into a smaller home, or if you decide that you're going to be transferring it on to someone else for ownership properties, then you're able to do so. All the taxes that you owe at that point in time will become due at that same rate for 181 days. Should you pass away unexpectedly, then whatever taxes are due from that point in time will be due to whomever receives the property afterwards. So yes, it is something that you would like to make sure that your next of kin, that whoever you're selling the property to, that they are aware of the situation. The taxes will be collected based off of your exemption amounts, because they're completely separate. It's the deferral is not the same as your exemption. So, there's no need to confuse the two. But if you have any questions in reference to that, please feel free, reach out to us. We'll be happy to explain it to you. And, as I said before, it is just mostly as an insurance to yourself, should the unthinkable happen. We offer flexible payment plans for all of our property taxes. We can start as early as the first delinquency date. So for most of us, it's going to be February 1st. So taxes are due at the end of January. We're able to make payment plans for you as soon as February 1st. This helps avoid collection efforts. And if it's just a matter of needing a bit more time, that is what we would recommend, because you can pay it off early if you have the ability, or if you're just waiting for funds to be received or anything of that nature. The payment plan assists you in avoiding collection fees and allows you additional time to make those payments. If the payments or if a payment plan is created prior to the account being submitted to our attorneys, then you avoid those collection fees from our attorneys, which does increase the total tax liability quite a bit. So if you are one of the folks that for whatever reason has not been able to pay their property taxes as of yet, then we do recommend getting in contact with us so that we can go ahead and set you up with a payment plan and have you set up before this end of the month, because at the end of the month, this is when we're going to turn over all of our delinquent accounts to the attorneys. So if you haven't already, please feel free to give us a call. If you'd like to stay on the line for a little bit, we're going to have our contact information up here shortly, and we'll be able to go ahead and assist you in getting that set up as well. But as we said before, no personal information. Let's see here. Next up, we would have our quarterly payment plans. And our quarterly payment plans is another benefit of our over 65 and disabled property owners. This is applicable to our homesteads for over 65 disabled owner, disabled veterans, and surviving spouses of our disabled veterans or over 65 property owners. There is no interest when paying on a quarterly plan so long as you are paying timely, and it does allow you an extension, but not as much as a deferral would, and it does not assist you with avoiding collections efforts if you do not pay timely. So in this case, you would break down your total tax bill into 4 payments, and they would be due normally with normal certification rates with the delinquency date of February 1. Your payments would be due in January, March, May, and July. You do have to be approved for this, but it is something that is really simple to apply for, and it can be as simple as sending us an email and letting us know that you would be interested in being a part of that quarterly plan. Once that first payment is due. And this is available for all unpaid property taxes for those over 65 and disabled owners or disabled veterans or their surviving spouses. Aside from our quarterly payment plans, we do offer, as I mentioned before, installment payment agreements. These payment plans help you to avoid attorney's fees, because a big part of all these options that we provide to our taxpayers is to ensure that you are not paying any more fees than necessary. We would like for you to be able to make your payments without having to worry about additional fees being incurred. And we like being able to offer as many options as possible to assist our taxpayers. So we do offer these for both homesteads and general property taxes, meaning if you have a rental property, we do offer payment plans for those as well. They do still collect penalty and interest fees. However, you would not, in starting a payment plan, you avoid the attorney's fees so long as you do so within that time frame before it gets turned over to our attorneys. So for the homestead installment payment plans, this is for anywhere between 12. We offer 12, 24, and 36-month payment plans. It is 1 interest per month plus the initial penalty month, meaning if my bill is due at the end of January and I set up a payment plan in February, my penalty is going to be that 6%, and then it's going to be 1% per month. So while it doesn't seem like a lot, it really does make quite a difference when you consider the alternative, which would be making your penalty and interest payments every month and then possibly getting collection fees once it gets turned over to the attorney. So this can be for current and prior years of taxes, and this is due once the amounts have been determined. You will owe that amount at the end of each month until your payment agreement has been paid off in full. On the other side of that, for properties that we do not live in, this is not my home. If this were not a homestead, if I rent it out, if I have properties that I keep for investment properties, or if I have a business, this is what would be referenced for those. And again, we offer 12, 24, 36-month payment plans, and they do still accrue your usual penalty and interest fees. However, as I mentioned before, it does assist in avoiding those attorney fees so long as you are able to create that payment account, that payment agreement before the attorneys have been applied to that property. This can again be used for current and prior years of taxes, and again, they are due at the end of each month. So if you haven't already paid your taxes and you aren't really sure where to start, creating a payment agreement for your property is a good step to take, especially here before July 1st, in order to be able to make sure that you don't get charged those additional penalty or those additional fees from our attorneys. We have multiple payment options for receiving payments on property taxes. You can pay online, you can pay by mail, telephone, or in any of our branch offices. We do have quite a few branches available to you Monday through Friday, and we do have representatives who are able to assist you with making those payments. We are not able to physically accept payments over the phone, so you cannot speak to a representative to make your payment, but they are able to assist you with most troubleshooting issues. So if you have any questions, they're always able to offer you those alternatives. We do accept payments in card. However, I will advise you that if you are going to be making a payment online, or if you're going to be making a payment in person at one of our offices, that if you are making your payment with a card, that I recommend making a payment with an e-check if you're doing so on our website. And if you have the ability to go and get a check or a cashier's check, a money order from, wherever it is that you receive those from, stores and the like, that you do so, as it does help you avoid that 2.45% fee that is associated with both debit and credit cards. We accept cash at our branch offices, but we cannot accept cash by mail, so please be mindful of that as well. And I'll leave this open back here in a minute if anyone requires this information in the future. But we do have multiple options to make those payments. And of course, while our offices are not open on weekends, our online portal is available 24/7, 365 days a year. And of course, you are welcome to mail that payment in, so long as your payment is postmarked with the date in which you are putting it in the mail. We can accept it based off of that postmarked date. So if you go into your post office and you request for a payment to be postmarked before you submit it to the mail carriers, we would go based off of that stamp that is provided to you by your post office. Same with certified mail. Let's see. Electronic tax statements. So we do have the ability, and we do have quite a few property taxpayers out there who would prefer to have an electric tax statement sent to them yearly, or a little reminder advising them that their tax statement is available and is ready to be paid. You can sign up for this on our website through www.hctax.net. And this would assist with a lot of folks who are more technologically preferenced, if they prefer to receive a email every year as opposed to waiting in the mail to receive their tax statement. This assists them in doing so. Alternatively, if you would rather still continue to receive your payment or your statement in the mail, and just have not yet, for whatever reason, come January or late December, your tax statement is available on our website as well. So you are able to search your property and your address to find your tax statements online as soon as they are available, and you are able to check on there as well for future reference. Miss Mabel did mention earlier today in reference to the damaged property due to a disaster area exemption that is being offered due to that state of emergency that we were in. That is a process that's going to be handled through the Harris Central Appraisal District, but we wanted to make sure that everyone was informed, so in case anyone came in a little late today, that they would be able to see it again. But that is going to be due by September 12th. So any questions can be directed to the Harris Central Appraisal District for filling out that form. And the form can be found on their website. But we do recommend that if you did suffer, that significant damage, that you make sure that you're aware of what options you have in reference to getting some assistance and reducing that tax liability. We have here a list of our important dates. If you have the ability to screenshot, or if you'd like to take a minute to write this down, it is something that I recommend just because it is a very good way of remembering what part of the process that you're in, and that way you can stay on top of your taxes, because information is really the best tool that we have out there. January 31st is, as I mentioned before, more than likely going to be your due date. This is in reference to tax accounts that are certified timely, and this is the last day to pay your taxes without penalty and interest fees for most of us. February 1st, as I mentioned before, is the first delinquency date. That is when we can start creating your payment plans for you. So if you know that you're not going to be able to pay your taxes timely, if you know that you're going to need additional time to make those payments, the sooner you're able to get on that payment plan, the better. It does help you in avoiding those attorney fees, as well as in homestead cases, reducing the amount that you would pay overall. April 1st is the date that collections and attorney fees are added to unpaid taxes on business personal accounts, so that business personal accounts specifically have that April 1st date in which to create those payment plans. And for everyone else, for property owners, July 1st is that date that collections and attorney fees are added to unpaid taxes. So as I mentioned before, if you haven't already, and you know that you need to set up a payment plan for yourself or someone that you know, we do recommend that you get a hold of us in order to get those payment plans set up for you, because it really does make all the difference, and not having to pay those additional collections and attorney's fees. October, November is, as I mentioned before, when our tax bills are going to be mailed. So generally, you'll be receiving your bills sometime around that time. I do like to mention, usually my bill will come to me in November around Thanksgiving. So if you haven't received it by then, feel free to check online. The mail is not always going to be the most on top of, or the most available method of receiving communications. So if you have not received it by then, feel free to check online on our website. It is available on there as soon as it becomes due. And worst case scenario, if you receive it in the mail a little bit later, at least you know what your bill is due and you have that information available to you. We have our contact information here. As I mentioned before, if you'd like to reach out to us for any questions in reference to setting up a payment plan, or any questions that you have in reference to your property or payments that you've made before, our website is that www.hctax.net. This is also where you can set up for your electronic statements and go online to make your bill payments, or see what your tax bill is going to be this upcoming fall if you don't receive it timely. You can send an email to us at this website, or at this email address here, tax.office@hctx.net. And that is going to be helpful for those of you who would like to set up a payment agreement for yourselves, or have questions that are more detailed or more difficult to answer without having physical representation of what it is that you're referring to. That's the email that you would reach out to for assistance with that. And of course, our phone number here, 713-274-8000, is available to you if you have any questions, or if you'd like assistance in anything. Our office is open Monday through Friday, so please feel free to give us a call. But I hope that you all got some information, that we all learned something new today. If you have any questions in reference to this and it's not very specific, please feel free to ask them, put it in the chat, and I'll check here in a minute to see if there's anything that I can answer for you. But on behalf of Ms. Ann Harris-Bennett, thank you for your time. Thank you for attending today. And hopefully we're able to assist you all very soon if you have any questions.
Okay, great. Thank you so much, Ms. Mabel and Shay, for the wonderful presentation. I'm just going through the chat. There are some questions here that I see. Let me scroll up, go to the earliest. All this information is only for Houston. I live in San Antonio.
So Linda might want to chime in on this as well, but the basic laws are the same because they're part of the Texas Property Tax Code. However, we do recommend that if you're dealing with specific issues, all appraisal districts may not administer the laws in the same way. So some specific questions you may want to address to the Bexar County Appraisal District. Linda, will you agree with that?
Yes, I would. I actually responded to her in a private or direct message, letting her know that all of Texas has to adhere to the same Texas property tax code, but each county may handle their procedures just a little differently.
Okay. Thank you. There was a question that said difference between 65 exemption, not pay, deferral repay.
So that is in reference to what we spoke about with the over 65 exemption versus your taxes being deferred for your the tax year when you turn over 65. And what the difference is when you have an over 65 exemption and you are living in that property and that exemption does apply to you, any taxes that are not applied, so if you have that exemption and it reduces your tax amount, you pay that property tax, and the difference of over 65 and non over 65 property, you don't pay back. So that's a reduction in your taxes. That's your taxable amount, and that's what's due. With a deferral, you put that deferral on accounts that have that over 65 exemption in place. So say if you were to be over 65 and you have that exemption in place on your account, you would be paying on a reduced amount. And if you have the deferral on that property account, you would have a postponement of your taxes. So you still owe those taxes at the reduced rate for your for your exemption, but that deferral assists in giving you additional time in which to pay that reduced amount, so long as that property is where you are living. So in both cases, those taxes are still owed. The only difference is with the over 60, when you have that exemption, occasionally it can reduce your taxes to the point where you do not owe taxes. And that's just going to depend on the value of your property, along with which jurisdictions are applicable to your account.
Okay, so the next, there's a person that had several questions here, so let's try to get through them. Just to be clear, if you have a homestead exemption, your home cannot be appraised of 10% of the current appraisal price. Let's see here. If your home is appraised over 10% with homestead, what options would I have?
So if you're, I'm going to let Linda respond to that. I can think of several reasons why that may be the case, might be the case, but just from a general standpoint.
Actually, that may be more of Raven's field, because if they're talking about it being appraised over 10% with a homestead, I would think if that's the case, then that would need to be a protest. Raven, do you have any suggestions for her? Because I think she's also asking about, running comps and everything on protesting.
Oh, yeah, that was.
So the next set of questions is how far back can she go to attest property taxes? What is the difference between market value and appraisal value? She went over the first slide, but I still didn't understand.
Well, I can answer the difference between market and appraised value. That one, the market value is what HCAD establishes annually, and that's based on sales comparables for like homes basically in your area. The appraised value is going to be the value that's based on the exemptions that you have in place, which reduce your taxable value based on those exemptions. And it's also important to remember that the appraised value is what your taxes will be calculated on, not the market value. And in many cases, the appraised value, as I said, is going to be representative of the exemptions that you have in place, the cap that you may have in place. So the appraised value is going to look across the board for different homeowners, will look differently depending a lot of times on how long they may have been in the home and that sort of thing.
What is the time frame I would go before the appraisal board if I denied the online offer?
I would have to have Braven do that one. I wish this person had been in one of our protest series workshops that we held in April and May, where we had several valuation analysts and appraisers online to answer those specific questions for her. Unfortunately, we've kind of moved to a different time frame of the year, but we can try to get those answers for her.
Okay. Can you sue the appraisal district?
Sure you can. It's going to cost you money, but you can go through a process called arbitration. If you're not happy with the ARB, your ARB approval, which I mentioned, your ARB hearing, following that is when you would begin to have the additional options of arbitration or litigation, where you might file suit if you're not happy with it. But beyond the appraisal review board, that's when it becomes you do have to extend financial resources to do so.
And what is a good website to run comps for evidence for the protest?
I don't think there's any particular website other than you can go out on HCAD's website for just to kind of see what some of the market values have been around the city, as well as you can contact a local realtor who can also provide you with some comps.
Do I need a letter from my doctor to get disability deduction? I get my over 65 deduction.
If you have your over 65 deduction, you would not be eligible for the disability. You only eligible for one or the other. And Linda, if you want to throw in anything on that, I think that pretty much answers it, right?
It did. You are correct. And they're pretty much the same amount, so.
Okay. Say there is 2 houses on one address. Can there be only one, can there be only one homestead combined? My dad gets an exemption because he's over 65, but they're charging me full price on my little trailer. We have the same address.
On your trailer, it would have to have its own account. If it's all one account, then yes, it would only be for the one home. You can only get one homestead on that property then.
Okay, Emma, you said you had 2 questions. I'm assuming that was one of them. Do you have the other question you want to unmute and ask?
Are you still there?
Okay. I think. Oh, she's trying to unmute herself. If you're on the phone. Oh.
Okay, there you go. So my other question, well, my first question is that, basically, me and my dad have the same address. I had built a trailer, like I have a trailer in the back of his house, but he's over 65 and he's also disabled. But What they're doing is charging me full price for my little trailer. So I know you said only one person can be homestead on the property, but we have the same address, but I have a trailer behind him, but they're charging me taxes on my trailer. Do you get that?
I do. So that's why I was asking, do you have a account for yourself
Yes.
on the property? I
I
mean,
have
for the trailer?
Yeah, so the account's only under my name because it's my house. Like my dad's not on the lease of my house of my trailer. He's
Mhm.
not on it.
Oh, okay. So then, yes, you should be able to apply for your exemption on your
And what would I apply for exactly?
for
What?
the
Because
homestead. I tell you what, I'm gonna put my information in the comment section, and then that way you can call me, and then we can discuss it all and look at your account. It'd probably be better to do that, and that way I can let you know everything.
Okay,
Is that
good.
okay? Is that okay for you?
Yes. And then
Okay.
I have one more question. So we also have two properties side by side. So two addresses side by side. So it's a combined, it's like a total 4 acres. So eventually what we want to do is combine both addresses to one main address. So that way he can get the homestead on like the both acres. Does that make sense? Like, so can he combine both addresses to be the main homestead on one address?
Yes, if it's too, well, are you talking about for your
No,
trailer?
no, no, no. I'm not talking about my trailer because my trailer is on his same property.
Okay,
So
but he has two accounts. They're side by side.
correct.
Yes, he can have those combined if he likes.
Okay. And then he can make that.
Also,
Uh-huh.
also, if he is not claiming it now, he can get a partial exemption on that. Is it a vacant lot?
Yeah, it's a vacant lot.
He
Nothing's on
can,
it.
yeah, he can get a partial exemption since it's connected to it.
Okay. Can you also, like, I guess when you give me your information?
Yeah, we can go over all of that.
Okay. Thank you.
Yep.
Okay, I don't see any other questions in the chat. However, if you do have any questions, you can unmute yourself at this time and proceed to ask.
I did see one here that said, how far can I go back to attest property tax? I think they mean protest property taxes. And that basically, to protest, you have to file within that statutory deadline of 30 days after receiving the valuation notice, or May 15th, whichever comes later. If you did not file a protest within that deadline, then you have probably lost your ability to make any changes on property taxes for that year.
Okay. No other questions, so
I think Sarah has another, she was still having another question regarding the deferral for Shay.
I'm sorry, did I miss it? Is it in the text or?
I think she addressed that. She addressed the difference between
No,
65. Oh,
she responded at 2:37. She said that, as I understand, over 65 exemption deduction does not have to be repaid, never has to be repaid. Deferral taxes are repaid, 100,000 tax, 65 exemption, 50,000 amount. The other does not have to be 50,000, never has to be repaid, even upon my death. So that was her question now.
I don't see
Just,
that. I'm
I don't
sorry.
see that. I'm sorry. I'm looking
oh,
for
okay.
it myself. Maybe she replied directly to you.
Yeah,
I
maybe.
just don't have
Yeah.
access to it. But so essentially, the exemptions will reduce your property value. So whatever value your exemption reduces is going to be the amount that you would pay and would owe. So say for instance you are on the deferral and for whatever reasons are unable to pay any of your taxes. So your taxes, as reduced as they are, continue to accrue. So let's say it's just $50 a year as a rough example. That $50 a year will continue to accrue at that 5% interest per year. And then should you pass away and your taxes are still owing in those $50 plus 5% every year, that amount will be due um, as it is with those specific exemption and that deferral percentage, that 5% per year, for 181 days. Past that 181 days from the time in which you pass forward, it'll be due at regular P&I. So if you are deferred and you do not pay your taxes, and you pass away without paying your taxes, whatever is due to that account will be due to your heirs or to whoever receives the property afterwards. Those taxes will still be due.
And Shay, if I could ask, since we have a few people listening, and this is a crusade of mine in terms of making sure the folks out there listening can help their neighbors understand, especially their over 65 neighbors, understand the difference between the over 65 exemptions and the deferrals, because there are so many, believe it or not, people out, the
Yeah.
homeowners out there who are afraid to apply for their over 65 exemptions because they think it's something that their heirs would have to pay back. That is not true
No,
of the
that
over
is not
65
true.
exemption. That is
Right.
the deferral. So please.
Right, exactly. So if you have the over 65 exemption and it reduces your taxes to zero, you owe $0 for that year. That exemption is applied and there's no money owed for that year. If the deferral or if the exemption reduces your taxes to zero, that is what is due. However, if your exemption is applied and you owe $50 for the year at the end of January, and you have the deferral and for whatever reason you are unable to pay your property taxes, that $50 is what is due. And that will be due until it is paid whenever you are still living in that property, or if you pass away, then that would be owed by your heirs. But while you are living in that property and the deferral is active, you have the ability to postpone your taxes at that 5%. But no, the exemption is a reduction of your taxes. It is not something that you would have to pay back the difference on whenever it's, for whatever reason, if you sell the house or whatever the process may be, they'll owe it from the time that they own the property forward.
Two different things, that's all.
Okay, great. All right, so I don't see anything else. Again, I want to thank you guys for volunteering your time today to provide this very beneficial information to our audience. Audience, thank you so much for tuning in. I do want to mention tomorrow we have our presentation on property tax exemptions and sorry, that's today. Sorry, the foreclosure. Tomorrow is our foreclosure workshop on property tax and collections prevention. So if you are imminent of foreclosure due to either of those reasons, definitely tune in tomorrow and take advantage of the information that's going to be shared. We do appreciate you all, and we hope that you have a great rest of your afternoon.
All right. Thank you.
Thank you.
Thank
Bye,
you so
everybody.
much. Have a good rest of your
Thank
day.
you.
Thank you.
And I